Stock market is starting to drop, and it's starting to drop quick. The Nasdaq is down 12.77%. The S&P 500 is down 10.51%, and the Dow Jones is down 8.13%, as investors are starting to fear that a recession is in the near future and a trade war is in full swing. All the major indexes are under their 200 moving average, and this is the biggest drop we've seen since 2020. Investors are clearly tired of Trump's tariffs, and fear is starting to become a reality as Trump continues his tariff plan, and there is clearly no sign of stopping in the near future. For young investors like me, this is a good buying opportunity, as we're seeing some of these big indexes and companies at a discount. But for others, certainly people looking to retire in the near future, this could be devastating. So on Wednesday, for Trump's Liberation Day, Trump finally enacted that 25% tariff being imposed on all foreign-made automobiles. We knew that, but we were uncertain what he was going to do with his reciprocal tariffs. He imposed a baseline tariff on 10% on all countries that we trade with rates even higher for countries he deemed the worst offenders. China was hit hard. Is the second biggest importer to the U.S., right behind Mexico, and they now face a 54% tariff. So all these tariffs are cumulative and are starting to add up to really high numbers. Beijing, along with the EU, Japan, and South Korea, have already threatened back with tariffs, and Trump's executive order stated that he has full authority to allow himself to push tariffs even higher if countries retaliate. So we're already seeing some of these countries retaliate, so I believe that we are in a full-on trade war. Trump he doesn't care. He doesn't care about the rising prices. He doesn't care about the falling GDP or the stock market going down. He's going to continue to push countries with these tariffs that he seems are going to favor this unfavorable trade that the U.S. has been facing. So are we really in a recession? Well, if we look at the market yield on the U.S. Treasury securities at a 10-year constant maturity, you can see all these shaded areas are recessions. So every time that we have entered a recession, the market yield on the 10-year U.S. Treasury bond and really all the bonds go down pretty steeply. Now, if we look at the 10-year Treasury bond for the last year, we've seen that it has been rising with the large growth that the GDP was seeing before Trump's election. But in December of 2025, we're starting to see this market yield go down. Even worse, every single bond offered by the U.S. government is currently down right now and continuing to go down. And like I said, we've seen that every time we have hit a recession, these bond yields have started to go down. So this is another indicator that we may be fully entering a recession. Now, if we even are in a recession, we would not know. The average lag time of a recession when it takes place and when it actually happens is 7.3 months. So some of these big financial news sites or just news sites in general wouldn't even cover this story. We've seen slower consumer spending through the CPI, the PPE. Retail sales came out pretty soft. The GDP growth for quarter one has already slowed down, and the projections for the future GDP this year are already in the negative. So it certainly is not a good sign. So this is certainly a learning experience for me. I really haven't experienced such a steep decline in the market. We're past the correction point. I've been talking about the correction. I was pretty positive that maybe we would come out of it, but Trump did not stop his tariff plan. And like I said, he doesn't care that the market's going down. He doesn't care that the GDP is falling. He wants to punish these countries that are giving us unfavorable trades. And there's certainly no sign of him stopping in the near future. So I'm learning that you really shouldn't put all your eggs in one basket. Having a diversified investment portfolio is very important. A lot of investors right now are taking their money out of the stock market, putting them in money markets, putting them just holding that money in cash as the fear of a recession really starts to hit. Statistically, bonds have performed better than stocks during times of recessions, but we've also seen statistically, which is surprising, that during times of recession, the stock market actually goes up. It's not really affected, but right now we're seeing the stock market decline pretty severely. So what should you do as an investor? Well, like Jim Cramer says, there's always a bull market somewhere, and I have given you stocks that are currently going up right now. Finding a company that isn't affected by this by the tariffs being implemented by Trump. For young investors too, like I've said, it's also a great buying opportunity. I really am not sure what's going to happen. I think, like I said, if we are in a recession, we wouldn't even know. And with the slower consumer spending, with the negative GDP growth we've seen in quarter one, I think that there's a large possibility that we're in a recession. I don't think the stock market is going to start to regain some of its bullish uptrend in the near future, not until Trump continues to ease off of the tariffs and this starts to become the norm for his 4-year presidential period. It's also important to note that during times of recession, we're starting to see that unemployment's rising, initial jobless claims are also rising, which we've seen both of these numbers increase. So not 100% certain that we are in a recession. We really wouldn't even know, like I said, but there is a large possibility, and you really need to be careful with your investments right now because the market is mean and it is not going to favor you in any such way in the near future. So I hope you guys enjoyed this video. Make sure to drop a like, comment, and ask me any questions or just your insight on what's going to happen in the future. Thank you guys for watching.